Massmart trades as game builders, warehouse, DionWired, Cambridge and CBW.
Okay, this is another interesting story because remember, of course, bought out, well, half of it anyway, by Walmart. Great expectations, huge expectations of what Walmart would then do to its margins and its rollout plans. Hasn't really delivered all that much by way of excitement, and I think the share price has started to tank a little bit, recognizing that the market is getting very impatient.
Market cap 26 billion rand, PE of 25.7, dividend yield 3.5%. And there we go, a very impatient market. Chantal, anything to add to the disappointment that people are feeling out there?
Yes, I reckon the market has lost patience with this one a little bit. Massive synergy gains were expected when the whole Walmart deal was concluded. We also expected them to move quite rapidly into the consumer staples space, more food orientated. They have started expanding that business within game, but it's been slow to gain traction, especially if you consider that the middle to low income consumer is struggling a little bit. That's kind of their target market. It just hasn't come off. And then, I mean, they still have a huge discretionary portion of their business. Macro is basically it's electronics, it's furniture, it's all these discretionary kind of spending stuff. And still, when you walk into a game, I mean, you have some food, but mostly the discretionary stuff. And when guys don't have money to spend, they certainly don't spend it on those kinds of equipment.
You haven't bought into the Walmart, Massmart
Well, we used to own
story.
Massmart many years ago, but we've not been exposed to it recently.
But not since it was bought 51% by Walmart.
Look, there are some bright points. The Builders Warehouse division continues to do very well. That whole DIY thing works well, and that's a good model. DionWired is there as well. But, unless they can fire up and get some sort of excitement and some sense that the market share is growing and so on, they're going to need to, I think, deal with. There's also another issue about pricing on the way that the results get reported and volatility with foreign loans.
Market players, investors just don't like any type of uncertainty.
The thing is, you don't like a company where you see robust top-line growth and you see nice gross margin expansion and everything you like, and then the bottom line says HEPS down 25%.
Yeah, that earnings thing, the reporting is crazy.
Yes, and then the next year it's up 25. I mean, it's those forex losses. It's the way that they calculate their finance costs. It's really just people don't like that, or investors don't like that.
Hot or not?
I'm going to say not.
Hot or not?
Yeah, not hot for me.